Part 3, December 4th, 2025 afternoon session, not falling, inducing shorts, then a fake breakdown, the market maker's technical script for harvesting short sellers. Hello everyone, I am Insider Lin. In this third video, I am going to show you the very classic price movement on the afternoon of December 4th, 2025. If the Asian morning session was the massacre of long traders, then the Asian afternoon session was the trap that pushed short sellers step by step into a dead end. We will use 6 screenshots to break down the entire technical movement into 4 stages. First stage 1347 to 1414, after the medium-sized downward kill to 4,175, the bottoming rebound. After 4175 was pushed down, the market did not behave like retail traders imagined, crashing and continuing downward. Look at this part. Multiple lower wicks. Small bullish candles slowly stacking upward. MA5 and MA10 start to bend upward. The price stands back above the short-term moving averages. What does this represent? The market maker has already taken a whole load of long positions at the bottom. Long traders who were stopped out in the morning session were too scared to chase the price again. And short sellers thought, this rebound is only temporary, it will drop again later, don't worry. But this is exactly the situation the market maker wants. He wants the market to believe it is only a light rebound upward. But in reality, this is the first step of the afternoon market maker's strategy to induce short selling, building a solid bottom foundation. Second stage 1447 to 1514, fake recovery, fake strength, inducing short players to enter. Next, you will see a very intriguing movement. The price slowly climbs upward from the bottom area. Even returns above the MA60, appearing as if it is turning into an upward trend. But when you observe the details, you will notice. Volume is shrinking. Candles stick tightly on the moving averages. Upward strength is weak. And after reaching the local high, it does not break above the previous high. This is not an upward bullish attack. It is the second movement of fake upward strength to induce short sellers to enter positions. Why is fake strength used to induce shorts? Because short sellers will say, it can't break upward, that means weakness, it will go down, I will short to profit. But what happens? The more short sellers enter, the more they believe it will fall. These short positions become the fuel for the market maker at night. Third stage 1548 to 1700 hours, the most brutal sideways grind on short sellers, no drop, no trend direction. This section is where almost all technical analysts misinterpret the market. The price enters a super sideways range. Unable to break the resistance. Unable to break the support. Grinding back and forth around the moving averages. Long traders cannot understand the movement. Short sellers see it and increasingly think, the trend is weakening, will it crash downward? But the market maker does not allow it to drop at all. This is the classic pattern of a forced short squeeze through not falling, the market maker's method of inducing shorts to add positions. The psychological change in short sellers is terrifying. It will drop soon, I'll add another short. Wait a bit more, this looks exactly like a pre-crash pattern. But what is the result? You see the candles never break below the large structural range. The market maker is accumulating all the short positions until they reach a saturation point. Fourth stage 17 to 1800 hours, a fake breakdown to 4183.90, instant pullback upward, perfect destruction of short sellers. Around 1700 hours, the market maker suddenly performs the most critical move. The price fake breaks downward once and instantly sweeps to 4183.90. You think it is going to crash downward? Short sellers at this moment go crazy adding shorts, chasing shorts, and filling their short positions. But the next second, the market immediately forms a V-shaped reversal and attacks straight back above the moving averages. Short sellers are trapped at the lowest point and cannot escape. This is the market maker's objective. Sweep your stop-loss levels. Consume your short positions. Take your cash. Turn the market into a powder keg in his hands. The upward explosion in the nighttime session is the final preparation completed by this stage. Summary: the afternoon session is a machine built to crush short sellers. The most important point of this video is only one. The market maker's true skill is not falling, but not falling. Not falling shorts continue to increase positions. Fake strength: more and more short sellers appear. Sideways shorts truly believe a crash is coming. Fake breakdown shorts go all in. Instant upward pull: all short sellers get squeezed. This is the entire script of the December 4th, 2025 afternoon session. In the next video, I will show you the nighttime rocket launch of the market maker. You will see how the market maker uses all the accumulated positions to turn the night session into an upward explosion fully controlled by him. If you think this method of market breakdown is helpful to you, remember to like, comment, and share. See you in part 4.